All right, guys. Good morning, everybody. This is Cal, and today is the 3rd of July, 2026. Crazy special market talk with Cal. All right. So crazy anytime, anywhere. All right, guys. Today I was not supposed to come in to talk about the market because we do know that tomorrow is 4th of July, Independence Day. And we all know that normally on Independence Day, that means the market will be moving. And that's why today's market, it will be closed early. And seriously, I didn't expect the market to move much. But of course, patriotic reason, yesterday the US market did not move a lot. And then after that, this morning, you can see the fund just flow in all the way to the markets and gold especially shoot up. All right, so this is something that is beyond my expectation. So we have to follow the market. As long as above OP, we stick to the buy side and we follow the yellow candle, we follow the buy. And of course, the market went all the way up to pivot and even KCB. And once you touch the KCB, it stopped there and pull back. Exactly what you learned from us. So guys, our crazy system is really incredible. Yeah. All right. So let me see who's online today. Tui online. Good morning to you. Susan, Janet, Keza, Dr. Shah. Good morning to all of you. All right. Online. All right, for the rest of the people that is in the group chat, if you are good to do a good morning in the comment box, please do it now. All right, I can see some of you are from Australia, like Jim. We have people from Singapore, Indonesia, Cambodia, Vietnam, China, all are coming in. All right, all these things tell us that we are definitely growing in the right direction. All right, so today, why do I want to conduct a special market talk? Now, today we will not put our indicator up. We will talk about the general market. All right, what people have been asking me, and I'll share a lot with you. Yeah. All right, morning to you. I believe that's Louisa. If not, that will be someone else. And Nigel, good morning to you. All right. So disclaimer apply as usual. Please understand this. Please do your risk management, especially what I will share next. All right, because I think that there would be some point it will get a bit ambiguous. You may get some point whereby you may feel that what is Kel trying to say? But all this thing I'm sharing is because I really care and concern for you as a friend. Yeah. All right. So let's go into the detail. Good morning to you, Gia. Okay. So let's just look at the chart here first. Yeah. Important chart. Okay. Let me see it again. Okay. So this is the oil chart. This is the oil. Crude oil. Now, I think crude oil can buy. I repeat, I think crude oil can buy. Why? Well, first of all, oil has been suppressed long enough. So basically, a triangle drawing shows and breakout already. All right, the first thing first. Second, you can see very clearly that today the market is now trading above OP. OP is $68.36, and now it's $68.90. Okay. Third, all right, very important is that today is above pivot one. Pivot one is $67.96. So it's above OP, above pivot one is a classic buy. All right, classic, yeah. All right, it's a classic buy signal on the pivot and OP. All right. So the thing is this, if you notice the KSI today, the selling pressure is very little. So that is not the same compared to the past 10 days. All right, can you see that? Okay, very good. And you also notice that the KCX are also been blinking for the longest of time. And now we see a little bit of reprieve from the sell side, from the retail. So because of all this, I feel that oil price might be going up on technical reason. All right. So where is my target? My target is, hold on here, let me just double confirm. My target should be here. Okay, my screen a bit slow down. Okay, hold on. Oh, still not coming in. Anyone can do me a favor? What's the KCB over here? Let me check my phone a bit faster. Okay, found it. $70.30. Okay, put it there. All right, the target that I'm looking at is $70.30. Okay, So where are we right now? We are $68, right? So we have about $1.30 profit. So guys, if you are keen to consider to do a buy on crude oil, you can do that. Okay, nothing is 100%. Okay, nothing. Yeah. So which means that I can be totally wrong. So please do your risk management according. Okay, I don't want you to tell people that, oh, Cal call for buy and then lose money, and then you'll come and blame me. Yeah. Everybody are all mature adults here. You should know what you're doing. If you think that you're not comfortable with this trade, just avoid. Don't trade. It's okay. You can even short it if you want to. Yeah. But I find it silly if you're shorting when the market is going up. Okay. All clear? If all clear itself, press number 1 right now. All right. Good morning to you. This is Arvin from Indonesia. Rebecca, I think you're from Singapore, I believe. All right. If I'm wrong, let me know. All right, guys. You can see that in our community, we are very, very open. We don't say, oh, you need to pay money to join the community. You don't need to do that. Once you are part of CRAZII, you can come in and enjoy this success with us. Yeah. Okay. All right. So the thing is this. Okay. To me, if you are telling me the US economy is doing very well or global economy is doing well, then theoretically speaking, you should be buying a lot of oil. But for the oil price to come down from a high of $120 all the way to today is down by almost $50, I think that is whereby the market should see a potential bottom. Okay. And of course, the thing is that we all know that the current situation with Iran and US has not been really complete. All right. So it seems that it's a standstill there. So usually come to standstill, if there's going to be any trigger, it will just create a spike, a spark of this, and then the market may spike. All right. So basically, if you ask me now, if you ask me to buy oil, back then when it was here, all right, I did buy, but the market went up a little bit. Then it was blocked by the KCL. Can you see that? So once the market blocked by KCL, I know something is wrong. I turn back to my sell position instead. And over the last few days, I've been calling for a buy if the market do go above 4p, but it never stay there. So the price continue to go down. And then after that, I know that we need to have a very big selling pressure, which you can see the market really, really came down more, right? With all the KSI, KCX, all very bearish. But the last 2 days, I was watching oil very closely, and I realized that the oil is holding up nicely over here. Okay. All right. So that is why today I started to buy some oil, and I want to see whether does it stay. All right. Good morning to you, Shauna, and good morning to you. This one's from Indonesia, Vietnam. Bui, is it? What's pronounced? All right. Apology. Yeah. Okay. So the thing is this: if you can see the KCB target right now, there are 2 targets over here. One is $69.92. The other one is $70.30. So you can go for the first one. The first profit actually is $69.92. So where are we right now? We're from here to here, right? So that's why the current price to the target price is a $1.04 gain potential. That's how you see this. All right. So target versus current, that net difference will equivalent to here, the upside target. So it's $1.04 from where we are right now. Can you see that? Okay, plus minus a spread. Yeah. Okay. So this is the oil projectile. Now, can oil continue to go down? Well, of course, oil can continue to go down, but I just don't see any reason. All right. And tomorrow is US Independence Day. I mean, I really hope nothing will happen over Independence Day. All should be good. All right. That's that. You can't deny that ID4 is always in my mind. When we talk about ID4, we talk about the the science fiction alien movie. Yeah. So to me itself is that I already told you guys coming July to be very, very careful, right? So why is that so? Why come to July, Cal want you to be careful? Okay, so let me see whether can I plug in my Dow chart to show you. Yeah. If I cannot, I'll go to my crazy.com chart. Yeah, I cannot. Really. Okay, try again. Cannot. It's just the data itself is just not strong enough. Maybe it's my computer. I mean, my computer with me for more than 5 years already. So yeah, maybe it's time to change. Okay, I just saw a pool over there. Let's see if the Dow can come out the data. If not, we switch to the crazy.com chart. Let's give it 5 seconds. 5, 4. Okay, it did. Okay. Now, this is the Dow Jones chart. And this morning, Dow also went up to touch my pivot exactly. Oh my God. Pivot is actually today is 53061. and now we have 53,000 for the Dow. Now, if you ask anybody, Dow will go how much? How much will it go, right? 2 years ago, no one will tell you it's 50,000, all right? Even last year itself, everybody was looking at 48,000 max top. But today we have 50,000, 53,000 stretch. I really think that we should really stop here. Yeah, in my fairest opinion, yeah. I think we should really be a little bit careful. 53,000 is really stretching the dollar to the maximum. But with the amount of money coming into the system, it's very difficult for the Dow not to go up. You see, it's a very simple Ponzi here itself, is that they borrowed money from people who are being promised that the money will be safe, economy will do well, and their money will get back in return by the US government. So the people put the money to the US government, you took the money and then push the stock market higher to maintain the sentiment. So as long as the stock market is up, all right, the sentiment is good, then there's no reason for people to panic and press the button. All right. So this is the strategy that the Americans are doing to ensure that the market do not leave away from them. Okay, that's the first thing. Second is the dollar. Now, people take euro currency or even Singapore currency to buy US to join the US bond market. So of course they exchange their currency, right? So if the smart traders, they realize that, okay, it makes sense to sell away the Sing dollars to get the higher currency, which is US dollar, then over just the currency exchange itself is a profit. So that's why now you notice that the US government is also now trying to increase interest rate to bring up the dollar higher so that it makes the other currency more expensive, and then the money will flow to US. So if the US is in high demand, US dollar is high demand, that means that the economy is doing well, everything looks good, then everybody will buy. Understand? So that is the reason why you can see that when Kevin Walsh came in as the new Fed, he basically keep on talking about inflation, but he just avoid the word interest rate. Yeah. So, and you can see out of blue, so many Fed officials are all talking about potential interest rate hike. Now, they were all dovish last year. Suddenly, they're all hawkish this year. So as you know, Fed talk is something means you talk but you don't do. So by talking about it, people get threatened. So people will not do something. So that is why I felt that, in my opinion, I think that the market is due for a correction. Because when everybody is involved in one side, then obviously the other side must happen. All right. So that's why I felt that 53,000 is a little bit too stretched. I felt that the market should be coming down in the near term. All right. So if you think that you share the same feel with me, you can press number 2 right now. If you disagree, press 0. Wow, so many too. No one say 0? Serious? Because you guys, what do you call, give me face? Okay, all right. I will just thank you for that. Yeah, just give me a moment. Oh gosh, there's so many messages all coming in, streaming in, asking me the same thing about the market. I don't say you can just buy some this oil. All right. Okay. So that is the first thing. The technical tells me that we are almost at the top. Okay, that's the first thing. Now, the second thing is that you can also notice that the KSI, all right, has been surging the last 10 days, at least, or 1, 2, 3, 4, 5, 6, 7 days, and the market has been pushing up. Now, yesterday we saw a very powerful doji directional day, right? So doji is this day, yesterday, and then the directional move, very clear, it came in. So with that, right, that means the market have already orchestrated this buyout. So normally when the market peak is always 2 conditions. So take note, everybody. Now, first of all, the first condition is that the market has to push up, obviously, to new high. And then after that, right, if the market is to peak, the market will come down and break the high here. So this is the highest point of the Dow yesterday, right? So if the market is, that means like this, I mean, market go up, the market break the high, break the high, and then after that, reverse come down and close down. So like this, okay? So I suspect that today, maybe or Monday latest, this may happen. Okay, and if this happen, then I can safely say The next candle to watch out for will be this whole piece of body. Now, this body distance is quite big, right? Let me just double check. This distance is about nearly 600 points, yeah? So, okay, so because of that, right? Okay, guys, you can actually you can do your AI modeling by doing this. You turn on your AI, your Gemini, your this ChatGPT or your DeepSpeak. You just turn it on, then put on to listen to me on the recording. So am I speaking? Your AI is translating for you, so you can get the best of this experience. Yeah, of course, we will have subtitles for this class, this session later. Okay. So the thing is this, everyone take a notice, yeah? Okay, so this is up there, right? Okay, so we're doing a bit of hypothesis here. Now, if the next day, all right, the market comes down and close below, that means this entire body engulfed this yellow candle, then I can safely say we are due for a pullback. And this pullback should be between 3% to 5%. Okay, so this is why today I want you to come in to listen to what I have to share. So in order to put it into perspective, okay, so what you do is very simple. You just okay, you just take the highest point today. Today highest point is how much? Anyone can tell me? A bit we cannot see very clearly. Okay, the highest point today. Anyone can tell me the highest point today? Let me just check. Okay, wait. 53062, right? Yeah. Okay, so we take the highest point, 53062, multiply by 0.97. Can I have the answer, please, someone? Can someone do me a favor? Can you do that? You take 53062 multiplied by 0.97. All right. Hi, Team CRAZII team, I think from Vietnam, should be Victor. All right, 53062 times 0.97. What number do you all get? Do me a favor, guys. Do it. Or take some water. Thank you very much, both Susan and Disha. 51470. Okay. Should be 47. Why you got 54? Why you got 57? Guys, you got it all wrong. Can't be 57, Dr. Shah. Can't be 57. It's a lower number. Okay. Never mind. Okay, 51470. Okay, 51470 is the number that we calculated. Okay, so now we put in the date, the line. Now today's sharing will be a bit longer than usual, yeah, because I want to go a lot of things with you. It's a special session, yeah. Nothing related to CRAZII. It's just a personal sharing with all of you, okay? All right, we have more than 80 people online today. Wow, it's a lot, okay? Here we go. So you can see right now, right? You can see now, what we did is that we take the highest point and then we do a 0.97. We get a number of 51470. That is what the line here is, if you take notice of that, okay? So this one is over here. Okay, so what's happening here is that if you draw the line finish, you notice that this is where the market actually been stopping before you went out, right? So you see that now we are doing the opposite direction. Now what we do is that now we take the highest point of what we have and multiply by down by 3%. It actually goes back to where those levels are. It means that the market actually stopped at where we calculated. So that is a very high chance if the market do come down, the market will pierce below the MA30, all right, and reach back to 51470. So guys, you can take a picture of this right now and tell ourselves that if Dow is to come down, right, we have already premeditated that. You can see the Dow Jones coming down to 51470. Now, from 53061 to 51470 is about 1,500 to 1,600 points, right? So that's a lot of money if you ask me on that. So if you are able to take a look at this trade and you are considering to do that, why not? Yeah. So you can consider. Okay, I'll let you decide. All right. Okay. So, Kel, question: are you very confident on this trade? Well, as a trader, you need to be confident. If not, how to trade? Second, we didn't say that it's a must sell over here, but you can do a small sell, and then after that, when the market really come down, then you can leverage on a heavier sell. So now small sell is because the market have touched pivot, and we can sell because when market hit pivot, pull back, right? Based on CRAZII, this is a sell, right? Small sell, yeah, small sell. Okay, pivot one, right? It's in your notes. If you forget, it's in your notes. We did talk about that, yeah. So pivot one tells you that if the market hit pivot one and doesn't go up, you can do a small sell, especially if it's above OP. All right, then we can only do a bigger sell when the market goes below OP. So today's OP will be the next target I'm aiming for, 52826. Only when the market go below 52826 that I sell. But because today is the US Independence Day's Eve, so I don't think the market will react so crazy today. Maybe Monday. All right, all clear? Okay, so this is my little present for you for the Dow Jones. And I want to show you the other present I'll show to you is the NASDAQ. Then I'll go to the fundamental, and then I'll show something very interesting on the Dow Jones and S&P. Okay, so stay tuned for the lesson today. Today's lesson is going to be really not the same. It's a special session. I purposely cater to all students of mine only. All right, so just give me a minute. I need to pull in the NASDAQ chart. Okay, so you can see this is the NASDAQ chart on the day chart. Now, 2 days ago, when I saw the diamond line, I know that the market has a problem. Now, yes, the market did break out. Yes, the market got the KRSI turn green. Yes, the market did go up. Yes, everything was perfect on the NASDAQ. But there is a 4 diamond there. Now, 4 diamond, when you see it, it can be a follow-through trade, or it could be a reversal trade. We have talked about this many times before. So a reversal trade is when you draw it, and you notice that the market just cannot go above it. And this is not a good sign. And if the market turns to red color, that is even a worse sign. So yesterday, if you look carefully, the market has a 4 diamond over here. And at the same time, there's MLP yesterday, which the market beautifully touched the MLP yesterday and pull back. Now, touching MLP and pullback is a classic sell signal, as you know. Okay. And then after that, the market goes below OP. Oh dear, selling began. But Cal, yesterday the KSI was all the way green. How come the market come down? Now, I already say many times to you, the big boys can be buying even though the market is coming down, and big boys can be also wrong. And the thing is this, yesterday, the market sell out because of Meta, because of chip makers, Cosby, Korea, down a lot. That's why the market sell. Now, this morning, the market has recovered, opened up slightly higher, and then started to move higher above OP, right? So the thing is this, I'm waiting. Now, I won't be selling here because yesterday I saw it. Now, because it's above OP, so I won't sell. As a matter of fact, I'm watching very closely at the MLP. I will see whether if the NASDAQ will touch the MLP and pull back. If the market touch MLP and pull back below the MLP, I will sell the NASDAQ there. All clear? All right, if all clear is all right, press the next number, number 4, please. Okay, all right. Okay, so that is remember me when you sell. Okay. Okay, you change your name, Victor. Okay, I'll call you Victor. All right, so that is what we'll do. So this is the NASDAQ. All right, this is the Dow Jones earlier, and then the oil market. Okay, that will be all for the technical side. Let's go to some fundamental side. Okay, let's look at this. Okay, everyone, take a look at this Dow Jones chart. It's very interesting. I want to show why. I'll show to you. So first of all, we all know that in 2020, in 2020, this is the highest level of the Dow Jones. Okay, and then after that, we all know that the Dow Jones collapsed and market went all the way down. That is back in the COVID time. Okay, all right. So move away from the thing. Okay, so let's see this. Oh, okay, here. Okay, all right. Then after that, from this point, it went all the way up, break the all-time high, and went all the way new high. Okay, fair enough. So everybody follow me now. We take it as this is point A, this is point B, and this is point C, and this is point D, and this is point E, this is point F, and this is point G right now. Okay, so follow me and you will see why am I calling you in today. Okay, so A to B is the move, the distance from A to B. If we bring it down, you notice that it comes back down to A, and that is where C is. And then after that, from C to D, back to B area, and when D to E, pull back, it comes back to D, which is your B, D, F, right? So it seems that it has a bouncing effect, like a little game, whereby it bounces around and the market knows where to stop. So that's why when the market from F break over, go back to E again, the market now is G. All right, and if you look at it itself one more time, if you look carefully, all right, the market did in between, did come here and come back down to here again. Incredible, right? It just basically know where to stop. And now we're at G. So now the thing is this, is G going to come back down to here again? It is possible, and let me explain to you why. Okay, so if you look carefully, okay, I take away all the writing first. Okay, now the distance from this point here to the highest point, the change is about 7,000 points or 24%. Okay, then from this point here to the highest point where the market stopped, exactly this, is up by 21%. All right, so what you see is that the market from this point to here is up by 21%. From here to here is up by 24%. So you may say, Kel, but why is the market going up higher, but yet the percentage is going lower? Of course, as the market goes higher, the base gets larger. So your percentage obviously will change a difference, right? Okay. All right. So the thing is this right now, give a guess. If this is 24% and this 21%, the difference is about 3%. Agree? So now if we take the next number, which is potentially 18%, all right, you can see now what will be the number. So everybody, do me a favor. This number here itself is 45,035. Now, time by 1.18. What number do you get? Now, I have not prepared this before the class start. I have not prepared this. All right. But I got this inclination that comes into my brain, and I want just to share this with you. All right. I really didn't prepare this in advance. It's just that that's how I was having my lunch, my breakfast. Then this thing just came in, and then I just know that I need to share this with you. What number is that again? Okay. How come two different number? So Susan and Victor, who's correct? Ayo. Okay. Let me see the most number. Okay, 53141. 18%, yeah? Okay, 53141 is the correct number. Sorry. 53141. Okay, 53141. All right. Okay. So that means that we are going to expect the Dow Jones to potentially have a small resistance at 53141 in the cash market. 13141 in the cash market. Yeah. Cash means the one that you see, the Dow Jones you see every day, where CNBC, Bloomberg, writers talk to you about the Dow and stuff like that. Okay. So 53141. Press OK, and that will be the number. Okay. So this is what you have just calculated. Now there's no science to this. It's not even a quant formula. Okay. It's just my own formula that I just self-created myself out of the blue. Okay, out of the blue. And then, right now, let me take a picture of myself first. And then what happened, everybody? I want you now to move away from here. Clean out my screen a little bit. And then, right, we go back to the Dow Jones. If I can go back. Okay, never mind. Come on. Just need one shot to bring it over. Okay, never mind. Everybody turn on your handphone. Right, you will go to your Dow Jones chart right now, and then you will see that today's the highest point of Dow Jones is about 53062, right? This morning. All right. So if you want to be precise, you can look for 53141 later in the afternoon, or Monday or Tuesday, to take a sell position if it goes there. All right. But of course, it's dangerous because you're just doing a hypothesis. But up to you guys. If you think that you want to take a little bet on this, you can try. But I can already tell you the target that the Dow should be able to touch will be somewhere between 53141 to 53200 level. Okay. All clear? All right. So today is a very interesting sharing session because I want you to participate and also want you to, get a hang of how analysis is being done. Because you can see that the point is, I'm trying to explain to you, is this is the highest point in the market. The market zoomed down first, all right? And when it returned itself, it went past the highest point. That's normal. The distance is over here. We're all the way new high. But the question is this: when the market comes back down, right, you notice the market come back down to exactly where the high were previously. Then after that, the whole thing repeated. And the new thing happened again, whereby you see the market go to a new high. When you pull back, it comes back here again. Interesting, right? It's like you're playing a little game. And then after that, when the market breaks the high here, when the market breaks the high here, it goes to a new high. Agree? It went to a new high. Okay, wait. It breaks the new high. It come back down again. It's like a game. The boys are playing a game, and you just have to follow. So that means that the top and the bottom, we may not know the top, but we do know the bottom. And after the bottom finished, then the top will come in, right? Okay. So that means that I can now give you an answer to the future. Stay tuned, yeah? Okay. So now, if the market really pull back down to here, which is 45,000, okay, let's say, all right. Now, the up wave here itself is, remember, is the 24,000, right? 24%, right? Then here to here itself, let me clean up my chart. Sorry. So here's 24%. So this is 21%. So we're talking about 18%, right? So 18. So the market also pull back. If this is really makes sense here, and if the market now really go back up again, so by right it'll be another 15%. Do you agree with this statement? If you agree with this statement, press number 5 right now. Okay. Okay. So give a crazy number: 53,141 multiply by 1.15. What do you get, everyone? Ooh, crazy, yeah? Today in the mood, yeah? All right, what number do you think that will be? Yes, well, you guys are very fast right now. 61,112. All right, yes. Remember, I told you, right, the next up wave will be 62,000 for the Dow Jones. Do you remember that? How many of you remember that? How many of you remember that I actually says that the Dow Jones next wave, right, the next crazy wave all the way to the sky will be 62,000 approximately. Do you remember that? If you remember, put the word remember there, yeah? REM. So the next wave now, if the market pulls back, it'll be coming down here, stop here, and then after that, the next one will go all the way up, and that'll be a 15% upside, and that will give you back to this number, 61,112, okay? All right, remember? Yeah. So guys, today, free gift. Now, I'm not too sure will this ever happen, but if it does happen, then you should know what to do. You will know how much money you can potentially make or want to make. Okay? All right. Now, again, there is nothing here that this is basically my 27 years of experience sharing this with you. Okay? End of the day, you decide where the market will be going. I'm just giving you the potential top here itself, that where the market most likely could be going. Nothing is 100%. All right. So let's see whether we can really reach 61,112 in the near term. All right. Now this one likely will be next year, maybe in the late of maybe early 2027 or even late 2027. I don't know. Now, don't quote me when the market will come and pick down. I seriously don't know. But based on mathematics, I think we can roughly know where the market could be going. Okay, right? Clear? All right. So that is the technical that I want to share with you on the Dow Jones. So you do take notice of this. And of course, you were going to ask me now, Kel, then how about gold? What's your forecast on gold? So using the same context itself, all right, gold has done the same thing. Gold has went up according to plan. So let's see what I can show you now. Everyone follow me. So gold, basically, the first stretch, it went up by approximately 25%. So it's very similar to the Dow Jones by 20%. And the last one was here. So you look at the same same way of doing it. So this one is approximately 22%, 23%. Okay. So this one is a bit high. Let me just put it down to the right number. Should be somewhere around here. So this was 24%. So it's like about the same. So give a very wild guess, okay? Give a wild guess, yeah? Gold at the time when this was happening was at 4,380, right? So from this wave here itself is 23%. This wave here itself is 25%. All right. So this is an uptick number of 2%. So we give a wild guess, okay? A wild guess. We take 25 plus 2, okay, it's 27. We take the number here, it's about 54380, multiply by 1.2, oops, 1.27. Let's try, just for fun only. This one I really got no idea. 27. What number do you get? 5562. Correct? Correct? 5562, Nigel and Angela. This number, when I show you, does it really freak you out? Now, really, guys, I did not prepare this today. I got no idea what am I going to share with you today except for oil. Then the rest of the thing just flow in like what you're seeing right now. So put the number 5562, right? You tell me, right? Okay, 5562. All right. And then you look at the crazy thingy right now. Okay, did I put that? 5562. Da, 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 da. Crazy, right? Oh my God, look at the high, guys. Look at the high. Look at it. Oh my God, this is nuts. Okay? Predicted by mathematics. Crazy. How many of you think it's crazy? Put the word CRAZI inside there. Okay? Right. If you think this is crazy, then you must listen to the last part already. Then it will be ultimate crazy. Okay. All right. So the thing is this. This is how numbers are created. All right. This is absolutely insane. Now, I need not prepare this. Neither can I do that. If I know that, I will be very rich already. Okay, never mind. So for the fun of it right now, everybody, for the fun of it, okay? Remember, the first number was 23. The next number was 25. Then we use 27. Agree? Okay. So using the same context, okay, of these numbers, remember, yeah? Okay. So now we do the charting and you will see my next target, okay? So let me put it here, okay? All right. So the market now has come down, okay? So by default, okay, by default, the gold should come down to here, okay? Should, based on what we have been using. But the thing is this, okay? The goal to come down here will break the major trend, and that will become a very big issue. So using mathematics here, I want everyone to take a look with me, okay? All right. The goal here is 4370. The goal here is 3500. So give an average out, yeah? So the distance between the both of them, 4370 plus 3500, you add them together, divide by 2. What do you get? Take these two numbers together, 4370 plus 3500, then you divide by 2. What number do you get? 3935. Thank you very much. So we put it in. 3935, right? Okay, and put it in. Change the color. Okay. This is why gold yesterday stopped there. Look at it. Look at it. This is why gold yesterday stopped there. Got it? Crazy? Insane? You have done it yourself. Okay? All right. So this is why I keep on telling you this. Actually, numbers can give you a forecast of the market, but you must know how to draw it. So that's why we have the CRAZII Masterclass that's coming in late August to teach you how to do this. I'm doing it live right now with more than 80 people online. I'm giving you the strategy to think about this. Okay, so it's really how do you put the numbers in to get it. Okay, so put it away and then we do the final part of the expectation to come. So now everybody, last number. This number here is 5562, right? We used 27% to calculate, agree? So let's go for the KEL. If the market is to go up, it will be 29%. So take this number, multiply by 1.29. What number do you get? Everybody. All right, want to do silver? Okay, I'll try. Remember, I have no idea why am I doing this. It's just that it just flow in this morning and the thing just keep on running in my brain. And that's why I quickly tell you today, we have a special session. You better come in to listen and you'll benefit from it, okay? All right. So gold, final number, 7,174 based on the calculation. All right. So the thing is this, based on this, the potential goal can go is this high. But I want to say this up front. I don't think so. I don't think so because this is a very high number, but the last few number in my mind is still there. So I'm going to give you this number here. I think this time round, if gold can go to 6,200, you should be very happy. Okay, anything that go beyond 6,200, you just remember this number 7174. Okay, get my point? I repeat myself. First number that you should have in your mind is 6,200. Right? If the gold really smash past 6,200, then I can tell you today 7,174 would be the next number. Okay, all clear? Now, Dr. Shah, today is not about crazy. Today is actually the guy who created CRAZII. This KEL is crazy. All right. So I just want to tell you that a lot of things are created by the big boys. Everything can be controlled, manipulated by the boys. And if you all believe in all these numbers now, and you think that gold will go to such crazy number, why could that be? Because I believe that after that, the Federal Reserve will do this. I'm going to put it in recording today. Yeah. Okay. Now, I believe that the Federal Reserve will do this thing in the near term. Okay, take this all away right now. Now, we will definitely do a recording and send this out later. Okay, let me just show you this here. Now, this is the US Federal Reserve interest rate the last 10 years, 20 years. Okay, all right. And I'm going to show something very interesting here. Now, I think that you have seen this before, but many people have given up on this because they think that it's no longer accurate. I can tell you that it's not because it's not accurate, but because people basically change the context of it. Okay, so now everyone take a look here, yeah? Okay, so now this is the last 20, 30 years US Federal Reserve interest rate chart, okay? Now, take a look here. This is where the interest rates get the cut, right? Okay. So now we all learn one thing is that when interest rate get cut, okay, in our textbook, you cut interest rate, cost lower, stock market goes up, right? This is what you learn in textbook. So if interest rate goes up instead, in textbook, what you learn is that the cost increases, hence therefore causing cost to increase, hence therefore usually stock market will go down, right? So that means that when you learn from your textbook, when interest rate is coming down, the stock market should go up, right? And when the interest rate is going up, the stock market must come down, right? Is that correct? All right, is that correct, everybody? Is that what you learned? Yes or no? Let me know. Let me know what you have in your mind. Okay, yes or no? For silver, I will post the chart later to everybody. Because silver got one big problem. Silver is manipulated. So I need to think carefully before I post. Okay. Yeah. Okay. All right. So now you got your answer, right? You all agree. We have 5 countries of people here. All right. So now I want to show you if I basically now do a superimpose of the Dow Jones or S&P lah behind the numbers. Right. You can see the problem already. Hold on. Okay, hold on a minute. Now, everybody take a look at the same context. Now, I change this to, all right, can you see now? What did I press? All right, itchy hand, touch wrongly. Okay, wait, hang on a minute. Okay, all right. So what do you see? Okay, the thing all fly wrong already. Never mind, just clear my screen first. Okay. Right. So you can see, right? since here. Okay. The one in red is the Fed fund rate, the interest rate. The one in blue is the stock market. When the interest rate goes up, the stock market went up. When the interest rate goes up, the stock market went up. When the interest rate goes up, the stock market went up. When the interest rate goes up, the stock market went up. Okay? Now, opposite. When the interest rate goes down, the stock market go down. When the interest rate goes down, the stock market go down. When the interest rate goes down, the stock market went down a little bit. When the interest rate goes down, the stock market go down a little bit. Can you see now? So give a wild guess, what is the US trying to do? All right, actually, right, this is a 6-month to 1 year game plan that is very clear to me, but I kind of realized that when I speak to people, people just don't seem to understand. Okay, let me do this one time with you on recording, then you can listen to it while you are free. Okay, so now you understand. The one thing that you learn from the textbook and what the market is doing is totally different. Okay, all right, so with this concept now, you can see that the US Federal Reserve has been cutting interest rate, right? And the stock market indeed has pulled back as what you see previously. But now the thing is this, you notice that the stock market now is surging up while the interest rate now is pretty flat, as in not moving down. So give a wild guess what will be happening soon. Is that if the Federal Reserve increase interest rates, then by what you've seen before, the stock market will have a pullback first, and then it will be going up. You understand? That is the first step will happen. And then after that, when the Federal Reserve increase interest rate, realize that, or not realize, in a way already pre-planned to bring the interest rate down, then the stock market will come down. Understand? So this is the reason why many people are getting confused about why this is happening, what is happening. So I'm going to give you upfront the thing will likely happen. The Federal Reserve will likely increase interest rate first 1 time to 2 times this year. And then after that, they will notice that they will notice that the market start to come down, right? Stock market come down for a while. Then after that, because they tell you that the economy is doing very well, blah, 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 they will print the money and bring the market up. So the market will go up with the interest rate together. And then after that, they realize that the inflation is too heavy, where everybody is not able to take it. Then they let go by letting the market drop. And then when the thing happens, they'll start to cut interest rate like what they used to do, from a hike to a cut, and then bringing the interest rate down. And when you bring the interest rate down, what happens is that the dollar will depreciate very fast, and that will bump up the oil and the crude oil even higher. And when this double asset goes up, the inflation will be even higher. And then after that, what happened? The stock market will collapse. The collapse itself, right, will be down by at least 50% in my personal thinking. Why? It's based on history. And if that actually happened, right, you will see the Federal Reserve will cut the interest rate even lower to basically a very flat level. All right, something like that. So this whole thing will happen somewhere, right? From here to here will be maybe in mid-2027 or late 2027. Then the one that recovery from here to here will likely be happening somewhere between August 2026. All right. And then the peak where we are right now, and when I'm speaking to you this morning, we're talking about July 2026. Okay. So let me just say this upfront. What I'm expecting is July 2026 is today. We should see a peak right now. And then after that, the market will start to take profit on the way down. Then hit about August period, the market stop. And then after that, the market will start to recover all the way to a new high, right? Enjoy that, make a lot of money, and maybe in early 2027 or mid 2007, somewhere around there, then the market will really, really peak. And then after that, the market might be able to see the ultimate crash that we are waiting for the last 10 over years. And then this can actually all happen. All clear? If all clear, press number 7 now. Okay, all right. Now, again, I have no idea that today I'll be speaking for an hour on this. I know it's a bit draggy for some of you, but I can tell you this information is really important for all of you. Yeah. Okay. And if you understand this and if you think that it makes sense to you, you should really take your time and effort to prepare yourself. Whether in different part of the country, different country, you can actually do that. Yeah. All right, now the fundamental already I have already prepared for you is all on my Twitter account, okay, or X. Go to my page under findcrazy.com. You can see that, okay, we already have a very interesting chart done by somebody else. He's talking about the market buying like never wrong, and usually they are wrong. And of course, we also know that we have the global timeline that's very dangerous. And also, Bank of Japan is looking to intervene. And of course, now gold is still a very good price to buy in the long term. And also, the bond market now is very, very overly stretched. And of course, at the same time, the global stock market capitulation has hit $166 trillion, meaning a lot of people are just buying. The market need to break at some time. And of course, we do know that the labor force participation has really went down. And because of the last report we see, right, the report was pretty bad, but yet the market jubilated because they feel that it's bad means the interest rate will not go up. But I tell you, this is all wrong, okay? Because this is not, if you look at the chart with S&P, the S&P doesn't lie. The chart of this Fed fund doesn't lie. When the Fed increase interest rate, the market actually goes up. And of course, we have Cosby now really down very badly. So a lot of money has been transferred around. And of course, last one is that even China market is coming down. So all this information, you can see it through crazy.com on X. Okay, read it, compare to what I said today, do a contrast. But remember, end of the day, if you are intraday trader, you still have to use the OP rule to trade. Whatever I shared today is a bigger view, it's a long-term view, it's over the next 1.5 years. So please do not jump into conclusion and start to do buy and sell without knowing what to do. You need to remember this. This is just a sharing session. All right, with that, thank you very much for today's session. We will have the recording up and then we will see how do we manage the subtitles. All right, guys, take care and I wish you all the best and have a good day today. Remember, today US market is closed at about 10 to 12 p.m. Take a break. Tomorrow, Saturday, rest. Okay, take care, Alison. Take care, everybody. Take care, Ian. Take care, Moon. Take care, Jerry. Take care, Dr. Shah. Thank you very much. Hope you enjoyed the session. Thank you, John. Thank you. We have Patricia coming in and Shauna and so forth. Right? Okay, guys. Thank you. Okay, bye-bye.